Welcome traders, my name is Adam Harris and Chief Market Analyst, and I'm just going to take you through the upcoming Economic Canada events for this week. So this is for the week commencing, I believe it's Monday the 20th of May. So June is just around the corner, and this is the kind of terrible bad news most people in the Northern Hemisphere who are finally starting to get warmer days do not want to hear. The days start getting shorter next month. Like, we've literally just started to taste spring and summer, and already, let's just be real, the days are going to start getting shorter next month. So enjoy it while you can, make hay while the sun shines, so to speak. And so that's relevant when it comes to today's investing analysis. Let's have a look at that. So first of all, in the Economic Canada news, there's actually almost everything here is worth mentioning. The Royal Bank of New Zealand interest rate decision always creates quite a bit of volatility. So if you are day trading and you are exposed on any of the QB pairs, please be aware of that. Make sure you have a stop loss in place, or exit your positions or cover your risk. Just make sure you have to do that, or that you do that. Then we look at cable. So we've got CPI data at 7 a.m. That's very early. CPI data coming out this week. I want to see what's happening with the UK. The pound is actually quite strong. It seems to be stronger than the euro. It seems to be stronger than the Aussie and the Kiwi, and the CAD, Swissy, and yen pairs don't really matter right now. So, well, the yen we can have a look at, but CAD and Swissy are not really offering a lot for traders. Excuse me. Then we have existing home sales. So here's where it gets really interesting to me. I think that there's a housing bubble. In other words, the price of houses has separated from people's earnings a while ago. This is post 2007, 2009 crisis. Well, actually, it started with that. It's one of the prime causes of that. But I think that I want to see what's happening with that. So if the economy is struggling, we would see the same or less. Actually, we would see a drop in that. But so far, we kind of, so we need to see what's going to happen with that with home sales. Then crude oil inventories, I don't worry about anymore, because Russia's not really a factor in that, which is amazing for the rest of the planet. So the US is producing more oil than it ever has before under the Biden administration, but also globally, we just don't necessarily seem to be as vulnerable to that anymore, which I think is a fantastic thing. And vulnerable also meaning dependent. So I know we're now looking, we're finally starting to the deviation away from dependency on crude oils is, I think, starting to take effect, which is a good thing. Maybe too late, but it's a good thing. Better late than never, I hope. Okay, then we have FOMC minutes now. So we want to hear that because we want to hear, look, if inflation is still an issue, we're not going to get any rate cuts. We're going to get rate hikes, or the threat of rate hikes. Remember that big institutions can threaten to take action. That sometimes can be enough to actually achieve the desired effect. Then we have on Thursday, we've got PMI data coming out of the UK, so I want to pay attention to that, see what that's like. But from a technical perspective, GBP is really strong. So unless there's a change out of nowhere, I expect cable to strengthen. And I'm saying it could change direction. I'm saying it's really strong at the moment, so I find that quite surprising. I've got also signals on my side that are saying it should be correcting, but it doesn't seem to be correcting, and it looks like it's really strong. And we also have hints seasonally that the dollar could actually be weakening in the coming month. So we'll see how that goes as well. We've got jobless claims out of the US. You want to pay attention to that. If they're roughly in the same area, there's no shocks there, that everything is stable. We've got PMI data out of the US. Also, I think worthwhile having a look at. I've highlighted PMI, but also new home sales again. And then we've got GBP. So almost a lot of GBP and US dollar news this week. I think all of it is worth just looking at. The specific amount isn't really a problem. What you're looking at is it a big deviation from previous numbers? Is it very negative or is it very positive? But the actual amount isn't really significant at this time. All right, let's go to the charts and have a look and see what's going on there. All right, so the VIX itself, maintaining the lows, very bearish at the moment, relatively just sitting down around the low numbers. So nothing really big there. The market's not on edge or anything. It's a really nice nervousness, kind of calm indicator. So no real problems there. Look at the dollar index. The dollar index is in a downtrend below the 50-period moving average, coming up to test it, producing a bit of a rejection candle there. However, on the weekly, it's in an uptrend. So it's in an area where it could find support. And so again, I spoke about this potentially being the case, I think, week before last, but this week we could find support in that area. It's interesting, seasonally, we could see the dollar weaken currently, but then start to strengthen in the run up to the election. So I'm just going to describe it as it goes, but I would expect that. So based off this pattern, it looks as though it wants to head a little bit lower, but this level where it is now, I think, is significant. So let's just see how the first couple of days of the trading week go. Again, euro up here is against resistance, overextended, pulling back, very bullish, seems to want to continue. almost up to the top of the range, but it's range bound, which actually means one of the characteristics of a range is that it can do anything. It can chop and change any direction, not just at the edges, but in the middle, because there is no real kind of direction. That's the problem with it. That's why traders who want a higher probability of profits would stay away from ranges. Okay, sterling, as I said, looking really bullish, stronger than euro at the moment. And interesting because it's kind of stuck within this range on the monthly, and I would expect it to push up a little bit higher, but it is at resistance. So I think for me, the first few days of this week is really going to see if the dollar does anything significant. We've got Aussie dollar, look at this, beautiful breakout of clear resistance and a retest and a bullish candle. So the implication here being that it is going to continue to the upside. Okay, so that kind of, we've got a high low. So far this week, Aussie dollar could be the one to watch to see moves to the upside. Kiwi dollar, overextended, still looking bullish. We definitely have bullishness on all of these pairs, separate to dollar index. The dollar index itself seems to be doing its own thing, but these majors are looking somewhat bullish. Okay, dollar yen. So dollar yen has produced a high low with a bullish candle here. The momentum again seems to be to the upside. So remember that the Bank of Japan definitely wants this trend to change, but they might take a month, 6 months, a year to change it, but it will be changing eventually, because if the market doesn't respond, and I've seen this before, I've been a trader long enough to have been around the last time the Bank of Japan intervened, and they did it several times until they had to do it. Eventually, they got the market to change direction. So I know that they will not quit until they see that change happening. It just means that it's higher risk to trade the yen pairs. But is the trend to the upside? Yes, it is. Is the risk higher? Yes, it is. All right, so dollar Swissy here, finding some really good support. The Swissy pairs, as I've said repeatedly, I'm very bullish on. This is super bullish. That's multiple tests there. It's off the 50-period moving average. This is a very strong buy signal to me. So I expect dollar Swissy to continue pushing higher and Swissy pairs to continue pushing higher as well. Dollar CAD is in a downtrend here. So you've got the majors, some of that, well, dollar index in a downtrend as well. But also we're in a bit of an area where we could see a reversal from that dollar. So this week, you know, I'm seeing cable looks really strong. The yen pairs have their kind of entrenched trend. And then I'm just going to keep an eye on the dollar to see if it does try to switch things around this week. But the trends as they are should in theory stay intact. But that dollar could switch around. We'll have to see what's going to happen with that. Okay, let's have a look at gold. All right, so gold has continued to push higher. This weekly looks very, very nice and healthy. We'll see how it deals with this area. But from a weekly in isolation, it looks good to continue. We've got to get it past these previous highs to see if this is a level of resistance, but so far it's closed above that. So unless Monday is an immediate reversal, I would expect gold to continue to the upside this week, which means 2,500 is in sight. Silver. Silver, obviously, woof, look at that. Big, big move. So as I said before, I've said in the past, I think silver was the one that had the greatest potential for upside. But now we're going to have to, well, the reason is because silver is not at all-time highs. So silver still has the potential all-time for upside, for more upside. I would look for pullbacks. They are overextended. Again, I would look for a pullback this weekend and look for buy opportunities. Copper going up to all-time highs. I think that is based on that data. No, it's still got some room, but it's near the all-time highs. Looking good. So you can see metals basically very bullish, but that's also partly tied to the weaker US dollar. Let's have a look at coffee quickly, go through these. Coffee just hovering near those highs, but that's a very nice bullish setup. So I expect coffee to take another run to the upside here. We've got natural gas is definitely turning around now. So there's no doubt. Look at that big move. We haven't had that before except in this run over here. But that's looking more and more bullish. And then we've got light crude is looking good. So a little bit of a double bottom here. I'd count that as a double bottom. And so that looks like a potential reversal here. We've got a bit of a swing low here. So this week, if we follow through, if we break the high of last week, I would expect gold to take another run back up towards the 81.50, 82 level. I'm not going to say much further than that because it's not showing signs of huge amounts of signs of strength. It's showing slightly more bullish than bearish. We've got, and that's West Texas as well, will be the same thing. So expecting some bullishness from crude oil, but not a lot. I mean, it might immediately hit resistance and then ping down again. It's not offering very clear signals. Wheat here looking, wheat, why did I put the O? Because of the divergence. So we've now broken above the high here. So this is where it gets interesting. If we are going to change direction, I would expect wheat to come back down and turn around in this area and go up. So if it doesn't, that's fine. Then it's going to be like natural gas. It's going to continue to wobble. That's a bearish signal in isolation. However, it is in a really sweet spot here to turn around. So this is what I'm going to be looking for. I'll call it, I think it's more likely to be in this area where I'm expecting it to potentially turn around. If that's going to be the case, I'm just going to mark this and put a little bit of a question mark here, but I want to see if that's going to be the case. I can see that's a bearish rejection candle. We'll see if that's going to be, if that's how it's going to go. And that is wheat. Okay. Sugar continues to come down. Sugar almost certainly coming back down towards these highs here. So 16.75, 17. Cotton back down towards the lows. Nothing great there. All right, let's move on to the big boys, the big girls and big boys, the big time players. Yeah, you can see them coming up to all-time highs here. So the question really this week is, are they overextended? Yes, they are on the daily. The monthly looks perfect, so they look like they've got plenty of juice. The weekly looks a little overextended, but not ridiculously so. So they should actually continue to the upside. My expectation for now, unless this is some form of unexpected resistance, I expect them to continue through this week. I would like to see any pullbacks. Any pullbacks would be opportunities, buying opportunities, as I said last week. So there was a nice little pullback here. I expect them to, they should be able to continue, unless there is some surprising data that comes out of the news, but it would have to be very surprising, not just standard stuff. It would have to be exceptional. S&P, same thing, a break and a retest and a bullish setup. That looks like a continuation. Is it overextended? Yes, it is, because it's already setting up for a new move, and look at the gap between that and the moving averages. But it looks good, man, it looks good. We've got same thing here. So all of these, my analysis is the same. My expectation is that the momentum will go to the upside unless there is some form of surprising US dollar news. The markets are super bullish. The only thing that would change, that would have to be immense dollar strength that would have to come through for some reason. Okay. Mini Russell, same thing again, expect these to continue upwards. In fact, that might even plausibly be a turnaround point. So let's have a look and see. Yes, there's some resistance here, so these things can battle, but there's this underlying an undercurrent of bullishness. Overextended for sure on FTSE. Any kind of a pullback here for me would be, there's a consolidation here. So we might have a consolidation for a while. But I have to say, though, if we had any kind of a pullback down towards 8,200, 8,150, that would be amazing. That would be fantastic. Yeah. I need to clean this up a bit. That's a bit of a mess. Look at that. That's a bit of a mess. Let me clean it up for a second. There we go. Nice clean chart. Not much else matters right now. So there's no need to go back and add anything in. So how nice is that? The DAX. DAX is looking good over here. I would have really, again, I would have preferred it to pull back to 17,000, 17,100 would have been good. Looks as though we're going to see a bit of a consolidation. Maybe a tap down to 18.5 and then a continuation. But overall, really nice and healthy. Best, in fact, I have to look at it, excuse me, but this is more bullish. This is the most bullish I've seen it since 2009. So the question is, what was it like in the run-up to that? Now, possibly the second I said that, you were like, oh no, we're going to have another global financial crisis. Not necessarily. As I've said, we are in the early stages, the first couple of years of what appears to be a really good bull market. And I continually just see so much media talking about how the market crash is imminent. It doesn't make sense. It doesn't make sense. We literally just had COVID, which was a market crash. We literally just had a year and a half, 18 months ago, we just had a bear market. It doesn't make sense that we're going to have a market crash again. I think people have got so used to the idea of markets actually crashing, and we never quite feel that we got away from 2007, 2009 because the debt stuff is still kind of out there, that people are just convinced that the shoe's going to drop. But when I look at the markets and I look at all the other data, all of the COVID and the bear market stuff has corrected a lot of certain things. What we have, which is real, is corporate inflation. Let's call it corporate inflation because it's strictly there. It's absolutely ridiculous. I mean, I'm sure most of you would agree. I mean, our average shop now is about 50% more expensive than it was like 18 months ago, and that makes no sense. And the portions in the packages seem a bit smaller. It's complete greedflation. So, but that's not the same thing as there being people being bullish on the stock market, wanting to invest. From what I can tell anecdotally, most people I know have jobs. So people have jobs and they're not being paid terribly. Most people are either being paid more or the same, but most people aren't really complaining about lack of money, lack of jobs. So in many ways, not everything is terrible. And so that's why I say that. So the fact that there's going to be another market crash doesn't really make sense. And I know we didn't see the global financial crisis coming broadly. Lots of people did, but a lot of people didn't. Most people didn't. We just aren't in that same place again. In fact, if anything, the mood seems to be more pessimistic and reluctantly like, yeah, okay, it's a bit of a bull market. But there just aren't the same number of red flags, or actually any red flags at this time. And I don't buy it. Okay, Nikkei. Nikkei looks like it's trying to get ready to go again. And again, like there's a bit of a gap there, but it's very keen to keep going. So let's see what happens with that. Bullishness maintained. So any kind of a pullbacks this week? Absolutely. Could we have something that surprisingly strengthens the dollar, like really strengthens it? Yes, that could happen. There's a lot of dollar news this week. And it is possible. But there's nothing when I'm looking at it going, I expect the dollar to strengthen. There's no technical clues this time. Apple continuing to the upside there. So there was some talk of Robert Reich, who's one of the people I follow on social media, who's phenomenal, big fan of Robert Reich. He talks a lot about stock buybacks, how stock buybacks are part of the problem. And so his explanation for this big move was that Apple initiated a stock buyback. That means when they start to buy back stock for the company itself, they buy it back, and then that creates more of a demand for the stock because there's less of it available for the public to buy. So, and that is, surely that's an issue. I just wanted to explain that was the explanation behind the big move over here. Amazon, yeah, but a little bit of a double top here. But Amazon is just up at all-time highs. The weekly looks so good. That is just an amazingly healthy weekly. The monthly doesn't look terrible. So we might get a bit of a consolidation, but I'm not too worried about Amazon at this time. Let's see what happens with this. AT&T looks very bullish. That's just going to keep going up. ARK. ARK, you know what? I don't know what to tell you, man. ARK is just a bit of a dud at this time. There's no excuse. There's really no excuse. It's shockingly bad. So ASML, this looks good. I like this pullback. Very nice bullish setup. Has it touched the old highs? Look at that. Just coming in, touching the highs. That's getting ready to keep going. And a bit of a double bottom on the daily. That looks nice and bullish. Okay, we've got Glencore. Looks good. Very healthy. No problems there. There's not a lot to talk about yet. These are, if they're overextended, they just need a pullback. But the sentiment hasn't changed. These are just beautiful. So that's nice and bullish for Tesco. Amex looks fine. I'm just going to jump through them here. Berkshire Hathaway coming back into this area where it struggled. It's going through consolidation. So for now, it's a consolidation as opposed to dropping, which means that Berkshire Hathaway shareholders and buyers are very bullish on it and do not want to sell anything at this time. So I do expect it to push higher. Will it break out of the consolidation now? I don't know that, but it looks really good. The point is it looks really good. Coca-Cola's back at all-time highs. I want to see this breakout. I'd like to see this breakout. And again, Coca-Cola is a big constituent of Berkshire Hathaway. We'll see. BP, again, BP and Exxon are always roughly tied to crude oil. So if energy and crude oil aren't really going anywhere, I don't expect much from this. But because crude oil looks a little bit bullish, my expectation here is that these will push up a little bit higher. Let's see how Exxon's doing. Exxon has broken out, pulled back. This is beautiful. Pullback, beautiful bullish inside candle, and a continuation to the upside. So Exxon so far is on its way to the upside. Not necessarily, we'll see if it slows down a bit, but Exxon is outperforming BP right now. General Motors looks okay. It's wobbling a bit in this area, but it looks like it's also building up to a bit of a breakout in that area. It looks fine otherwise, so I expect that to continue up. JP Morgan Chase, amazing. Super bullish. Again, any kind of pullbacks would be great. QQQ looks good. No problems. Adidas is already a bit of a retracement. The markets are so bullish. If the markets are so bullish, it's not a reason to be fearful. It's not a reason to bail and panic and run. That's bizarre. That's bizarre. It's a reason to potentially consider, reasonably, to add to your positions if you have any of them. It's not necessarily a reason to panic and chase the markets. It's not a reason to panic and suddenly start thinking the sky's going to fall down. We need to be rational and reasonable because, that's how you get it done. Ask yourself, how's Warren Buffett doing? Is he calm? Is he rational? Is he nervous about stuff? Because if he's not nervous, then there's nothing to be nervous about. And also, don't go down rabbit holes with YouTube videos. I mean, mine's the exception, obviously. But yeah, don't get on a rabbit hole where the whole world's going to implode and the universe is going to implode and everything is terrible. If you're watching videos about that stuff that all sound like it's evidence-based and stuff, just be cautious, okay, about that kind of stuff. There's a lot of toxic poison out there, and it's not good for people. And it's on the rise. It's not even like there's less of it. Okay, so Morgan Stanley looks amazing. Some very nice stuff. Looks good. I'm very happy with that. NVIDIA looking good. You know, NVIDIA, I really would have expected a deeper correction. I've said this every single time. It's back in the red zone. Let's see what happens with it. The weekly looks okay, but you see these little wicks up here? The wicks up here imply that area is a problem. So I'll get rid of it over here, but I'm going to add it in over here because it is, you could see, it's an issue. Okay, that is a problem for them. So let's see what happens to that. We could just see a consolidation that could last a while. Let's see how that goes. Netflix looks fine, beautiful. PayPal is struggling. So interestingly enough, in the last few weeks, this week and last week, on Threads, which is my main kind of social media, my personal browsing one, essentially, I've seen more and more people comment about how their followers don't like PayPal, or they don't, they'll be looking for sponsorship, or they'll be looking for donations, and they're like, okay, I understand people don't want PayPal. So it seems to me that in America, which is a big enough market to impact it, that it's not very popular for various reasons. So for the last few years, I've always said, well, I don't know what the problem is with PayPal, but yes, I'm getting the impression there are service and transactional and functional issues with it that are causing a problem. So it turns out that PayPal needs to get the act together, or they're not going to change. Nothing's going to change. So I'm guessing that's what it is, because it's the only thing I can use to explain it. Spotify looks fine. That's a beautiful trend continuation candle. That looks good. Spider, also pullback, bullish inside candle. That's going to go. FedEx looks fine. I mean, we spoke about this last week. It was a nice little bullish candle. We broke the high, but the game is not over yet, which means that I would still expect a bullish setup in this area. So let's see if we get that this coming week. Haven't fundamentally changed my opinion on that. Tesla nothing's changed. Nothing has changed. So it hasn't done anything really in the last 4 months. It's kind of stayed in this area. I'm not too worried about this. This is not enough information to say, oh, it's recovering, or oh, it's tanking. There's not enough information. So we really we need to see it. I mean, we need to see a break above this high, or we need it to kind of break below that low. That'll give us the confirmation. So I guess we're just going to watch from the sidelines. This looks perfect. So Vanguard is good. Walt Disney, okay, so Walt Disney's pulled back further than I was expecting to. In this area, I still expect it to turn around. I'm going to leave this because I want to see if we leave it for one more week, if we get a turnaround. Okay, but we really, really should be coming soon. Beautiful. This, I maintain my bullishness on this. It looks good. We haven't really had a big break to the upside, but we have broken out. We're above the 50-period moving average. We are trying to break through this area. So we'll just stay and watch. That's on the 10-year T-note on bonds. And Eurobond is going largely sideways the last 4 weeks. So no real changes there. Okay, cool. Then we have Bitcoin. That's a pullback and a bullish candle. So to me, looks as though we might be getting a continuation of Bitcoin. Okay, trend continuation. Ethereum, this looks like we're going to get a little bit of a double bottom over here. If I am not mistaken, that is a bit of a double bottom. Let's just move this up a little bit here. Let's do it there. Yeah. So that might turn out to be a double bottom. And so we're going to see it take off from here. Looks okay. Otherwise, looks fine. Solana looks really good. Looks nice and bullish. I anticipate some resistance in this area. So let's mark that. Cardano, one of them was Binance. I was looking for a breakout to the upside. That looks okay. It looks like it's finding a base. So you might have heard the expression accumulation distribution. This would be accumulation. So you can just see it kind of slowing down accumulation. Binance hasn't broken out yet. So I think when Binance does the breakouts and everything else has done a move to the upside, it looks good. So what do I expect to happen this week? Well, based off of this, unless there's a surprise with the US dollar, I'm expecting the markets to just continue. So last week I kind of titled the video saying, is the stock market really boring now because we've become so addicted to drama? Let me rephrase that. We're not necessarily addicted to drama. We've been exposed to so much continual drama that it does kind of mess with our heads a bit. That doesn't mean we're addicted to it, because we might be happy without it. but we get exposed to it a lot. So we're used to there being some problems and doom and gloom all the time. Seems to me so far as if the markets are just clicking and ticking along. So it's in principle, I still am of the opinion that we're going to have a bull market for the next 5+ years, and therefore every correction on the weekly and certainly on the monthly are going to be great opportunities to look to add to stocks that that people find or value. And there's a big difference. I'm just going to wrap this up saying, for example, I qualify a stock investment as, because it's old, it's been around forever, as safe and secure in comparison to something that's newer, like cryptos, or sorry, such as cryptocurrencies. So for me personally, I would, adjust my portfolio so that I have a bit of bonds, which is very safe, and then I would have stocks, which is pretty safe, and then I would go a little bit more risk on, maybe some commodities, and then finally 10% of that would then be exposed to cryptocurrencies or something, for example. And then that way, if cryptos are volatile, then it doesn't impact the majority. You get things like dividends, you get all kinds of other stuff that you get safety and security on that. There is common sense in traditional instruments, blue chips and things like that, because they're steady. And they're sane. They're just sane. So you just kind of want that. Anyway, so just to kind of draw your attention to it, whereas something that's more volatile, higher reward, higher risk actually isn't really the right approach. It's just higher risk. That's all it is. It's not, just because it's high risk does not mean it's high reward. Okay. Cool. I'm going to leave you with that. And I will see you next week. Have a good one.